Welcome back. You're still tuned into Trading Hour. Take a look at the Nifty Bank, by the way. That is up over 200 points now. So there's definitely a, good recovery playing out there. It was anyway the part of the market which was more resilient all through the morning. But right now you can see Kotak Mahindra Bank is the top gainer right now. It is, up with a 1.7% gain. A lot of the larger banks, ICICI, SBI, HDFC, all holding up quite well. So that's what's happening with the banks. But here's some interesting news now. In the past few months, there has been a decline in retail customers entering the equity market, as well as a drop in transactions. We have been talking about this. Last week on the Editors Roundtable, Anush took us through what's really hurting the sentiment. So let's take a look at that right now.
Number of retail clients with NSE, that's down 38 lakhs. In last 6 months, 38 lakh clients have actually disappeared from the NSE. They've stopped trading, and the number of NSE clients is now actually lowest in last 8 months. And this is very important. The retail or HNI share in cash market is down to 44%. This number was a mind-boggling 66%. 66% of the volume 2 years back post-COVID were getting generated from the retail and HNI. Now, this is NSE data, but I'm giving credit to a Twitter account, a digital blogger, because this guy really helped me a lot in terms of this data, and it's only fair that he gets the credit. But that's the big number. The other big number, what's happening in the cash market turnover. Just look at that. The daily average turnover, which had reached 81,235 crores in February, daily average, has now reduced to 50,384 crores, which is a drop of 38%. Now, this doesn't mean that people have lost interest in stock markets. People have lost interest in investments. But there is some interest in market overall. Look at what's happening to the options turnover. This is the index options, and we're only taking premium into account, not even the overall notional turnover. The premium, which used to be 17,485 crores in February, that's gone up to 53,562 crores, 206% growth. No wonder the SEBI is a bit worried, especially considering that 90% of F&O traders actually end up losing money. And that's why this data is very important. And now the reason for that, because from October 2021 peak, the market's not given you anything. The Nifty is down 5%, and that's not even telling you the true picture. The Nifty mid-cap is down 8.2%. And the Nifty Next 50, which is where, again, a lot of portfolios are benchmarked to, it's actually down 16%. And equities are not giving you a return. The other thing is happening. Remember, in 2021, the fixed income market was not giving you anything. The repo rate was 4%. Now, repo rate has gone up to 6.5%, and it's still rising. And what fixed income is giving you is it's generating risk-free return of 7 to 8%. So when you can get 7 to 8% risk-free, why do you want to be in an asset class which is actually giving you minus returns and, raising your blood pressure? I think that's maybe the reason that a lot of retail is moving away from full-time investments and back into their jobs.
All right, very interesting data right there. And it makes sense. And there's also a JP Morgan note which we were talking about earlier. So they're saying for Q3, we saw retail investors selling $1.9 billion. This is versus the $1.7 billion in the previous quarter. And it makes sense, right? After COVID, we saw those couple of years where we had just everyone making money in the markets. You shoot your shot, you're going to make some money. So I guess on the back of that, that's what JP Morgan is saying as well, that the lack of returns is probably just taken the retail investor away.
Everybody thought that they can be a fund manager. It's the latest career in town. Well, guess not.
Guess not.
All right, so let me just quickly give some more details on what the retail participants have done in the December quarter. And these are the top buys, the individual stocks that retail investors bought in the December quarter, according to JP Morgan and their analysis. Bajaj Finance, Adani Ports, Tata Elxsi, Bharti Airtel and Wipro. And Wipro, remember, has been a rank underperformer, but retail favored Wipro. The top sells for retail in the December quarter were Reliance Industries, Hindalco, Tata Steel. So metals were out of flavor for retail, and Infosys and TCS. Interesting, right? Infi and TCS, these are the two large IT companies. They've been doing well, they've been outperforming, but retail has decided to perhaps book some profits. And they've pumped in money in Wipro, which was the underperforming IT stock in the large cap universe.
Yeah, those are, of course, some of the interesting stock moves that this report talks about. It also takes into account some other factors, for instance, if you look at total market turnover, which obviously has dipped in the fourth quarter so far, and the year that's going to close out. The JPM note points out that the daily market turnover is down 27% versus the third quarter. if you look at it. And there's a 40% decline in the non-institutional portion. So it's really retail, which is now taking a backseat with respect to too much of perhaps a day trading or even, a couple of shots here and there. It also points out that SIP flows are still resilient. But other than that, the flows, retail flows coming into mutual funds, they're also cooling off a tad bit. And that could explain why there is a lesser amount of interest in the market from the retail pocket. And obviously, it's highlighting the same reason that Anuj spoke of when you are getting better returns in the fixed income market. I loved how he put it. Without any heartburn, heartache, any anxiety, you're getting 7% in a fixed deposit. Why would you bother with an asset class that's not made it so easy to make money? And I guess that's exactly what's playing out on the screens.
The only silver lining right now, at least, is that the SIP inflows have remained rock steady and have been going up. But X of that,
while the SIP inflows have remained rock steady, if you take a look at the total AUM for the industry, it's come down considerably. So there is definitely nervousness, across the board there as well. So perhaps the only part which is holding up is the SIP.
All right, that's the interesting analysis that's come up in the December quarter and the way money has moved. Get into a break. On the other side, we'll be joined by the management of CMS Info Systems. Stay tuned.
Welcome back. You're with us on Trading Hour. Let's quickly put the spotlight on a corporate conversation. CMS Info Systems saw growth in the bottom line in the third quarter, boosted by other income. To discuss the prospects of the company as we look at the final quarter as well as the next year, we have with us Anush Raghavan, who is the president of cash management business at CMS Info Systems. Anush, thanks so much for being with us. Just looking at some of the details, I mean, your revenue was up almost 22% year on year. Quarter on quarter, there was about a 4% growth. And, profitability increase. I'm even seeing a margin expansion at the end of the third quarter. Tell us more about the trends that you've witnessed in the business in the fourth quarter. Has it been as strong as Q3?
Good morning, and thank you for having me on the show. I think if you look at the history of the company, especially for the last few quarters, since the time just before and since the time that we went public with our IPO about 12 months back, we've had the privilege of having a very strong order book during the time of the IPO, which was almost 2,000 crores. Much of FY23 has been focused on the order execution and implementation of the order book. And as our share of revenue has switched from cash-based revenue to more non-cash in the form of technology and remote monitoring services, and those revenues coming on full stream has helped drive our margin growth. Over the last 3 to 4 years, our revenue CAGR has been about 13% over the last 4 years, but our profit CAGR has been almost 32%. So that sort of continues to play out in these current quarters, as you see. Our margin expansion has been on the order of almost 500 basis points. We used to be at about 23% EBITDA 2 to 3 years back, and that's closer to 28% EBITDA margins as we speak. Going forward, and we had a 4-year guidance that we had given for the period from FY21 to FY25. And idea was we had guided to doubling of our revenues from 1,300 crores to 2,600 crores over that 4-year period, which sort of comes to almost 18% CAGR. We are halfway through that journey. We've had about 8 quarters of almost 20% revenue growth. So looking forward, based on the order book that we've been able to further build up over the last 9 months, we've been able to secure additional order wins of almost 1,000 crores. We feel fairly confident of being able to achieve that guidance.
Okay, you seem confident that you can achieve that guidance. Anush, thanks for joining us. This is Pavitra. I just want to ask you a slightly more, zoomed out kind of question. What is the kind of opportunity that you see in this entire ATM business? And currently, what is the number of ATMs that you have which are just under your service?
Thank you. Absolutely, Pavitra. So when you look at our revenue streams of CMS, I think what we've been able to build over the last few years is today a diversified business services company which caters to a set of BFSI and organized retail, which need the presence of a company like us, which has its presence across the length and breadth of the country. 2/3 of the revenue that we get today come from cash management. And when we sort of fast forward and look at our guidance of FY25, we think almost 40% of the revenue should come from technology, managed services, and AI-based remote monitoring. But having said that, and we look at the opportunities in the cash business, over the last 9 months, we've actually seen an increase in the cash usage in metros by order of almost 15%. And when I look at the sort of short to midterm potential going forward, we have the private sector banks which have made announcements that over the next 2 to 3 years they intend to expand almost 10 to 12,000 bank branches. We will obviously be a benefactor of that business expansion. On the ATM side, the country has seen an addition of almost 20,000 ATMs in the last 2 years, and there are various RFPs by public sector banks in different stages of the pipeline, which amounts to almost 40,000 ATM additions. So that sort of itself presents a very interesting growth opportunity for the core part of our businesses. Switching to the remote monitoring, which is sort of the newest business, we entered into this only about 15 months back on the back of a very small acquisition. When we acquired this company, they had just about 1,000 sites under installation. In the last 12 months, we've been able to expand this to more than 20,000 sites. And what we're offering in remote monitoring is sort of the Gen 3.0 of that sector, so to speak, which is really an upgrade to what was earlier surveillance and then became remote monitoring. And today what we're offering is sort of business insights backed by data to companies. So for instance, if you had to sort of use our IoT-based software, you'll be able to figure out at any point in time, if you're running a bank branch, for instance, how many visitors did you have? What is the average time that it took to service those visitors? What is the sheer amount of waiting time, for instance? So sort of very interesting. And that business has seen an expansion, a significant expansion over the last 12 months. As we speak, we are sort of almost hitting 100 crore revenue run rate.
Just very quickly, I think you said the order book, the order wins so far have been 1,000 crores in FY23?
Yes, that's right. So we started our IPO with a 2,000 crore order book, most of which we have executed on. And we have sort of continued with that win momentum and built an additional 1,000 crores of order wins in the last 3 quarters.
Okay, so till December, the order wins are about 1,000 crores.
Yes, that's
right.
right.
And in January and February, have you won any more orders?
I think we'll talk about that as we finish Q4.
Sure.
But, one of the interesting order wins that we've had in this last 9 months has been, we have a proprietary software algo, which seeks to help banks manage the security of their ATMs better. And, today almost 30% of India's ATMs are secured by our proprietary software.
Right.
And one of the orders that we won was to help one of the largest public sector banks with an incremental 20,000 ATMs.
Okay, we'll leave it at that. Thank you very much for joining in and all the very best. For the markets, we've managed to recover some losses. So now, we're above the 200-day moving average on the Nifty. And look at the way the banks are surging. 300-point rally now on the Nifty Bank. That's up nearly 3/4 of a percentage point. The top 5 Nifty gainers are all in the financial space. Kotak Mahindra Bank, ICICI, State Bank of India, HDFC Limited and IndusInd Bank. So banks are truly firing away. Get into a break. We'll come back with more. Welcome back. Now we know that the Adani Group is sitting on very high leverage. But how much of their debt comes in for refinancing over the next 12 to 18 months? That's going to be very critical. Vivek is here with the numbers. Vivek.
Well, good morning. So today, Bernstein has come out with a report, and what they're saying is that the key timeline is to watch out for is going to be March to September of 2024, which is going to be the key challenge as far as the group is concerned in terms of the debt repayment schedule that they have. So number one, what's actually happening is a leverage of almost $3 billion taken for the Ambuja acquisition matures in March 2024. The Ambuja warrants, where it requires almost 15,000 crore of fund infusion, that is expiring by April 2024. The Ambuja second tranche of close to $1 billion matures September 2024. Adani Ports, 650 million bond, is actually maturing in July 2024, and this is an unsecured, development. Adani Green Bond Holding Company. Now, this is very important. $750 million maturing in September 2024. And what Bernstein is saying is that this is going to be the largest challenge, the Adani Green Holding Bond. Now, what they also add is that while Ambuja Cements and Ports business have strong assets, the timing of the maturity as far as Ambuja is concerned, they believe can put a strain as far as growth is concerned for the company, as well as the liquidity plans that they have in store as far as their own capex is concerned.
Thank you very much for that. With that, we're out of time on Trading Hour. We've seen a substantial recovery in the Nifty. In the last 60 minutes, the Nifty has recovered close to about 60 points, trimmed its losses to about 83 points. The banks are outperforming. The Nifty Bank is up more than 300 points. It's a wrap on Trading Hour from the entire team. Thank you for watching.